To take a stock. It's Monday, the 4th of September, 2023. We're back from our summer holes. John, how are you, fella? You don't need to catch me in this weather, John.
No, finally we got some sun. No sun while I was off, unfortunately.
Yeah,
Did you have a nice break?
Yeah, I couldn't believe it was okay, but Joe, I'm feeling that. I don't know. I was just chatting to Martin earlier. He said, "Is it possible to get jet lag from Tenerife? I feel really under the water." And you know, it's one of those things where you come into the airport as well. My wife is always very early for everything. You know, so we get there at least about 2.5 hours before, pretty much. Got through, and another 2 hours delay on the board. Oh my! I don't want that happening. What's going on? So literally, we were delayed. And then we're in the, and it just took ages to get home. We didn't get home until like 2 a.m. So
nice.
But it's nice to get back. In fact, we landed. It was surprised. I didn't. There's so many things, bits of news. I keep a track on stocks and all that stuff. And RNSs come up from Vox app, the app, and a couple of bits of macro pop up. But this whole sort of the crumbling of the schools and all that stuff going on. Rishi Sunak coming out saying, "Oh, I'm not to blame for this." Well, he would say that, wouldn't he? He would say that, wouldn't he? I don't know. I've not read much into that, but you've sort of flagged it. But also the weather. When we landed, the guy we took it off. Apparently, in Britain now, it's only 1 degree cooler than in Tenerife. Thought, wow, really? Tough now. So hopefully, though, we're going to now, the home straight for this year, and it tends to get a bit more liquid. But I did say there at the top of the piece, what's the catalyst? Do you think? By all means, hit the subscribe button, comment below. What's the catalyst? Because we've been in this market now for 2 years? On the 7th, actually, it'll be 2 years since AIM was at the high. And I think, what's the catalyst for this market to re-rate? Any ideas on that, John? In my mind, I think it's basically central banks. Central banks,
inflation.
Inflation they're data led by inflation. So unless the inflation starts coming down in a series, a sort of trend coming down, then they're not going to be drawn into reducing or pausing. And I think it's that essentially.
Well, while we've been away, there was some European inflation figures which caused a bit of a fright. On the basis that they stayed pretty sticky between July and August. The same is likely to be true here. I think the Chancellor is already pointing to an increase in pump prices as being the reason why inflation might not moderate as quickly as perhaps everyone hoped. But it's something that we've mentioned. I just, the outlook for inflation is not clear, but one thing that does seem clear is that it's not going to go away. It might moderate, but it's not going away. And wages are something that I think we need to, pay particular attention to.
Yeah, absolutely. Wages are one thing I know, but we've got it just feels like now we're at the almost. I do think, and I've been saying this. Part of me thinks, am I delusional? But I do think right now, if you're in good companies, and companies that have a future, then I think 6 to 12 months. You could do very well. And I think we'll start seeing we are bouncing on the bottom. You have some days where it sort of rallies and it comes back. I mean, the AIM all share is still sort of close to its lows. And let me just shoot green to this. It was, there we are. Look at that. And I've got the thing there. It's 200, in fact, a bit more than that. 223 days in, 44% down. But
just the idea of recovery is an interesting one anyway, because if we're in a new interest rate paradigm, so a very short space of time, and it doesn't seem like we're going to go back to them anytime soon. So, some of the sort of exuberant investing that we perhaps saw while money was cheap is not going to come back in the way that it did. So, I don't think we're going to see a return to sort of the really speculative highs that we saw before. We might see a return to sort of higher than where we are now once sort of seller exhaustion is over, but I don't think we should be anticipating some like boom recovery to kind of real sort of as say exuberant heights that we saw before, because the interest rate environment just means that can't happen. Money isn't as cheap as it was before.
Yeah, I agree. And if we are going to get that frothy boom, I mean, top of the market, bull market is almost like 5 years. In fact, the last one was 10 years, generally down to low interest rates and, the buying assets and all that stuff. But generally 5 years. And of course, it'll take 5 years to get sort of really back to where it was and for inflation to come back down, interest rates come down. But nevertheless, we are at a low. Hopefully, it'll come off the bottom here.
I mean, the one thing I would say is that, there is still this big valuation differential between the US and the UK. The UK, is very, very cheap when you compare it to the US. And the fact that the US is so expensive, I think I was looking at this the other day, and it's sort of an aggregate market P of 24 when you strip out even the sort of the magnificent seven, the big tech companies that have really been driving the market there. With them included, it's even higher. The likes of Nvidia, Google, Microsoft, etc. And so what you might see, it's money flows, so there'll be some being sort of a strategic reallocation away from the US, which is seen as expensive and where the returns therefore might be harder to come by, and into the UK where there is cheapness, but by dint of that cheapness, returns might actually be better in the years ahead. So that might be the catalyst, a bit of big reallocation, and that would be institutional money. Yeah. Okay. Quick top line look at the indices here. The FTSE 100 up 0.4%, FTSE 250 as well, just a bit more than that. AIM struggling a little. It's a struggler today, but nevertheless, it's a green screen here for all start of September. Let's hope it continues. Ocada's number one there, Ente number two, Glencore. There's a couple of builders there, but Fresno, Admiral Group down, but Johnson Matthey down is a bit, but it's not a huge amount. There's no theme there. There's no theme there that I can see. Let's look at the front page of Vox. In fact, we got a comment there talking about Gregory says, does Futura Medical have a blockbusting product? Do you know what I did? That's one of the reasons why I write stuff down when I research stuff. I do write stuff down because it's so easy to forget something you researched like 6 months ago. And I'm sure I've looked at Futura Medical before, but I'm stumped to think, what do they do? Do you know anything about them? Is this I think is the erectile dysfunction company. Okay. It's a topically applied erectile dysfunction treatment. It's been around a long time. Sort of inching towards profitability. There was definitely no pun intended there. It's a good company. It's not small. I remember this being an old favourite of my former colleague Simon Thompson. Is it a blockbuster product? Yeah, I mean, it's Viagra was a blockbuster product. Why shouldn't this be? Well, Gregory, let us know what you think, because obviously you're researching them. Let us know. I mean, that's a good thing. You can comment on this live. By all means, comment. You can't comment after it goes live. So if you're watching it live, you can. In fact, you can comment after. We obviously can't catch up. So front page here, CleanTech Lithium's DLE plant on track for commission in Q4. Yeah, this is quite exciting. This is direct lithium extraction, isn't it? This is good technology. I'm hearing a lot about this, not just from CleanTech. In fact, I've got a very good friend who works at a fracking company in the US. And they are looking at direct lithium extraction because they are sitting on lithium reserves, which as we've spoken about before, are fairly abundant. The problem with lithium is getting it out of the ground. There's no shortage of lithium on the planet. There's a shortage of mines. And there's in fact a shortage of mines that can extract this in a clean and environmentally friendly way. DLE is potentially a good solution to that. This is good news. They're this is on track to get that plant, that DLE plant, up and running, being shipped over, all on track as promised. Again, Simon Thompson bargain share of the year. Is it? Is it? Okay. This is chart. This it's you see it's peaked up there on some kind of news, come back down, hit that resistance previously in 63 pence. So it have to get back above that, start an uptrend. But that peak coincides with the release of bargain shares. Oh, is it? Oh, yeah. There we are. Okay, there we are then. Zenova. I know you say you like this. In fact, it's worth going on Zenova's website because they've got a whole few videos of what they do, examples of coating stuff and then setting fire to it without their coat and with their coat and how it protects it and all that stuff. So
Zenova, and you've done it. You've written about them before, John, haven't you? Zenova.
Yeah, it's fire protection is obviously very, very important. Particularly in this day and age where you've got lots more potential for fires. Lithium-ion batteries being a very good example. But this is instrumental paint, and this particular application is around solar panels. So it's for a coffee company with warehousing. They want to retrofit solar panels. That increases fire risk, and this paint reduces that fire risk. So it's a nice little company based out near me in Essex, Brentwood in Essex, if that means anything. But I always like to see the local companies doing well. It's loss making, not particularly well covered, not a particularly big company, but it's had some really quite nice deals that it's signed recently, selling a lot of stuff with Amazon as well. So one worth keeping an eye on. I'd really like to see some good numbers around this, some forecasts.
Well, that may be a bottom there, but you need to break above that, that resistance there. Could be a bottom in the chart there. But let's look at the Belvoir, because there are some stories, headline stories as well. But there's one other thing I didn't catch out. The Belvoir, you talk about here, they did buy a financial arm, didn't they? Or sort of financial products company as well recently. Yeah. But what's the wider macro about this? Obviously, Rishi is trying to get house building going, but they've rolled back on an environmental rule that's came from the EU. Now, what was that?
Nutrient neutrality. It's basically related to sort of runoff pollution levels in rivers, which has been sort of blocking the ability of house builders to build in certain places. Local councils, or it's Natural England, I think, were advised to advise against developments that where this nutrient pollution issues is a problem. It's basically an environmental protection that's been taken away. I was speaking to someone about it yesterday who works for a water company, and their view is that basically what it's doing is taking the cost of managing nutrient pollution from the house builders and passing it on to the taxpayer. That's the long and the short of it.
Oh, okay.
Yeah, I wasn't paying a huge amount of attention to the market last week, but a house builder's got a big boost off the back of this. Okay, because it basically means that there are more places in which they can build, and it means that some of the costs that they would have to incur in that planning process around sort of environmental surveys are no longer going to be borne by them. I'm not convinced this is a good idea. I think the house builders have had a lot of support from government.
They have,
they really have, and I think in many cases they haven't used it well, that support. I mean, I think there's you pay a premium for a new build house, Help to Buy, it gets people on the housing ladder, but then you're in many cases buying a very poor quality product. And this is something the industry's been sort of battling against for quite some time. And now, you're buying something that's potentially damaging to the environment as well. And the house builders get away with it. And at the same time, their chief execs pay themselves bundles of cash and dish out, dividends willy-nilly. So, you've got to ask yourself as a shareholder, is this the kind of company you want to be supporting? I mean, there is a shortage of housing in the UK.
It's always been that, hasn't it?
There is a structural shortage.
Yeah, but I do keep referring to, earlier, as I said, we are close to the bottom, bumping along. And you can see that with house builders. Like I said, they haven't gone any lower. We've had some really bad news coming out. And in fact, recently on the macro, there was news that house prices have fallen the most since 2009. That was the great financial crash when banks were on the edge of going through. And we've had that come out. And yet they're still, if you look at, for example, MJ Gleeson shares, they hit 330 back in, was it January? And even the recent fall off, the 350, the down to, and there's a tiny bit of a higher low there at 353. So, almost like, unless we have some catastrophic numbers coming out, isn't all the bad news in there? I don't know if they are. Maybe.
Well, I don't know that it is. So this we spoke about just before we broke up for summer. Chris Nicholson came out and really, really surprised the market. With a 30-odd% downgrade of profits that it only outlined, it reiterated that profit guidance of about 70-odd million, in June, and then 2 months later comes out and slashes that forecast. So that that just tells you how difficult this market is. And now I think the other thing you've got to pay attention to in with the house building sector is political risk. It's absolutely huge. And I was debating this on Twitter the other day. You could say the country is short of houses, fine, but is the country short of the kind of houses that the house builders want to build and sell? And I don't think it is. I think it's short of good social housing stock, good affordable housing stock, and really that's not how the house builders have been making their money for quite some time.
MJ Gleeson sort of specialise in that area. They are the lowest cost new house builder on there. So I suppose maybe that's one way forward.
MJ Gleeson we've highlighted a few times before, but look at Belvoir's numbers today. You mentioned Belvoir a minute ago. I mean, I looked at these for the site. Belvoir has done really well, but Belvoir's focus is on lettings. So what it has is a very large base of managed properties that offer it recurring revenue. 75,000 properties it's got on its books that it looks after, and revenues from the letting side of the business are rising, but from the sales side, they're really doing very, very badly indeed. It's got a mortgage book. It's got a financial services wing, rather. Sorry, and it did. It acquires, regularly, and it also supports its franchisees to acquire, local competitors as well. And they have seen difficulties in new mortgage. Their business is being driven by remortgaging. Their underlying sales in their financial services business were down. It's acquisitions that are helping them keep top line going. So, good numbers, hike the dividend at Belvoir, but still points to a challenging market. And the shortage of properties, of course, which is why I like Belvoir, is translating into rental growth. I think the ONS rental index up 5% over the half year. We've got a shortage of property. That means a lot of more rental properties are required, a lot more affordable properties are required. But it's good news. It's good news for Belvoir as it stands.
Yeah, well, I mean, that's why the chart looks a bit better than sort of Gleeson's, I suppose, in a certain way, because
100%.
they've got that. As you can see it, here it's sort of hit resistance at 196, broke above that nicely back in March, and now we're into a new range here.
FinCap's got 375p target on those, so quite some ways to go.
Oh, okay, yeah. But my thoughts are still this. I mean, the medicine given to the economy is working. Everything's sort of slowing down, and it'll get to the stage where inflation will come down, and bad news is relatively quite good for the markets because the central banks can't throttle this patient until it dies. They have to take the energy out of this patient, but they can't kill the patient. So then they have to ease up. That's what I see the bank have been doing. Essentially, the economy is like a patient. It was like hyperactive. It had too many steroids, which is quantitative easing. It almost collapsed through overexerting itself. The markets are all lower. The patient's in the bed now, trying to get a bit more energy, but they don't want the patient to get too excited again. He's still got some steroids in him, so they're strangling him. And they can't kill the patient, but they've got to slow him down in some way.
It's a tricky one. It's a tricky one, but because arguably, zero interest rate policies, cheap money over many, many years has really, created a bit of a zombie economy. And where this policy has been used. You've got lots of companies that in normal business cycles would have disappeared, because they're badly run. You've got a productivity crisis, which is part of the same problem. Yeah. And it's the UK is a sick economy. There is no doubt about it.
Yeah, not as sick as Germany though.
Not as sick as Germany, but still sick nevertheless. And and as I say, cheap money has just and sort of policies of forbearance and just allowing the whole cycle non-cycle to continue. We've got a lot of weak companies out there, so in essence there is an argument for a bit of creative destruction to be unleashed back on the market to actually allow the strong to survive, and those strong will grow, and they will create the jobs that are needed, and bad companies to fail. I mean, really, and for behavior to be moderated. It doesn't sound nice. But arguably, you need a bit of a forest fire to actually regrow a stronger forest.
Yeah. Back to Gregory on Futura Medical. He's had a bit of experience there, I think. But he said the product Eroxon Is he winding me up? Has only just launched, going to the US, and now he said works quicker than those blue pills. There we are. A bit of home research there from Gregory. But there we are.
Well, that's right. Do your own research.
If John's Classic is there, they're inching towards possibility. Can't be beaten, I don't think. Let's go back to the front page quickly. And we got AFC Energy grows Saudi presence through exclusive distribution deal. Yeah, it's AFC.
Yeah, I like this. This is good. What they're doing is they did a big deal with Speedy Hire the other day as well, or correct, JV with Speedy Hire. And I like the look of this. This, hydrogen generators. This is this is really quite a good technology, and actually this is a good, interesting market for that technology. Essentially the Middle East, Saudi Arabia in particular. Saudi Arabia has got some really ambitious plans to transition from, what we all know it as, this massive oil producing economy, into something a lot more, fundamentally green. I can't remember the name of that. It's a huge project they're proposing. It's not a mega city, but green technologies are proposed to be at the heart of that. Yeah,
Metals One, of course, reports high grade. Victor's right on that. So they're in sort of Scandinavia, sort of a friendly mining jurisdiction. That's the trouble, you see, when you're looking for the kind of elements we need to power us into this new future. A lot of the companies are held in questionable jurisdictions where you never can tell whether the government next day will say, right, we're increasing tax royalties by 50%, or we're just taking over this company. But at least when you're in sort of Australia, Canada, or in the Scandinavian countries, then it's a bit of safety there, isn't it?
Yeah, the difference in Scandinavian countries. So yes, it's the mining jurisdictions are much friendlier in terms of the sort of respect for the property law of ownership, that kind of stuff. But much more stringent, arguably, in terms of sort of environmental legislation. But I think the former is what is more important for investors in mining. Just look at what's going on in West Africa. Since we last spoke, the situation there is getting worse and worse.
Yeah. Well, in fact, we'll talk about that. One of the winners today is Wildcat Petroleum, right? And they've opened up an office in southern Sudan because they said even though there's been problems there, what do they say there? Start unrest is actually, since the start of the unrest in Sudan, has actually doubled the amount of oil it's pumping through Sudan pipelines to the Port of Sudan, the Red Sea. So they've opened an oil thing there. But yeah, I mean, like I said,
you got to be brave to be investing in southern Sudan. But
the chart there says it all a Wildcat because it's gone down and it's a little blip today. One of the rises though, but nevertheless, I know you've got bit crazy. What else is there? Oh, Ergomed's takeover deal. MNRG is linked to EQTEC, which is the bank refinancing of Italy, the development center. I think it's 2.9 million loan facility there.
We talked about EQTEC the last time. I can't. This is waste to gas or waste to syngas. So we talked about this last time. EQTEC, I think, is a good company. Definitely worth keeping an eye on. I can't remember the name of the second company we spoke about that was doing something similar.
It's Powers Energy. Is one of those as well.
One of
those. What is it? One of the rises today. And where was it? It was. In fact, this is the most read because AFC's there. We covered that. Board changes, Blenco sampling. Physiomics was talked quite a few times. I was aware. Someone having a go at me said, "You don't cover this company."
We will.
I've always looked at Physiomics, right, and I quite like their tech, what they do. But the issue is their contracts have always been very small. Maybe they've been recurring in some way, but now they've come down to the point where they may be, so they've raised a little bit of money. They may be significant now because they're only 2.4 million market cap anyway, and so they've come down significantly, to be maybe a good sort of value at this level. So they've come down a long way, and in fact, recently they've had a nice little rally, but from the bottom. The trouble is in this market, when you get a certain size, unless you are, making money, it's very hard to raise money to sustain yourself if you're loss making. No, in this market, no one wants to invest money. It's always risk averse. That's the trouble. It can be downward spiral, can't you? Anyway, Trackwise today. They've gone through. I held those a while back. I really like what they're doing. They sort of Trackwise, supplies for parts of the components to EVs and all that stuff. And they had a big contract with an original equipment manufacturer. And that sort of started going wobbly, hit the rails. Because of that, they couldn't then raise money because raising money was based on that. It was a downward spiral, and all of a sudden they've delisted today. Cancellation, Trackwise Designs. And if you look at the chart, it's absolute nightmare. But these are one of the sort of the promises in this new EV revolution. I mean, look, they're at 99 pence, quid a share, and now they're at almost a tenth of 1 pence. Or so it's scary. So you're very careful with small stocks. They have enough cash for at least 12 months, and they're not too reliant on one big contractor. If that falls apart, it all falls apart.
Well, this is kind of when I look at Physiomics numbers, this is where I kind of think, okay, there's something interesting here because, it is small, but it's got two things going for it. I think one is it's in the sort of picks and shovels business that I like when it comes to healthcare. But secondly, you look at this, look at the numbers, and it's very prudently managed. Not profitable yet, but not hugely loss-making either. Keeping expenses to a minimum. There's actually some numbers in the market, which is kind of useful. So we know what we can expect it to make in the coming years. But it's only going to take few bigger contracts for this company to swing into profits because, as I say, they manage their cost base very prudently, and they got a bit of cash in the bank as well. So. Definitely worth keeping an eye on.
So revenues, like I said, and I sometimes think maybe they shouldn't talk about. I quite like the fact they are transparent. They put the value of the contracts, but often they not that impressive the size of them. And like I said, 660,000 this year. But like I said, they've fallen significantly now to almost that be quite material. In fact, it's 3 times. What is that? Still 3 times sales, I suppose. So 4 or 5 times. It's not expensive, but if they land a biggie, it could really motor.
It will motor. And that's not just because of the sort of hype around landing a big contract. That's because it would actually take them, to having sort of meaningful profitability. Because, as I say, prudently managed cost base. Yeah.
One of the fallers today, Six Group, and I thought, hang on, they did have an RNS today. I checked the RNS time, and I got to say, it is annoying when companies do this. September the 1st, 10 to 5, Friday afternoon, update board change.
A lot of ball changes. A lot of ball changes today.
Yeah, there are, isn't there?
Yeah, first day back from summer holidays, everyone's got a new job.
Yeah, but literally they say here that because of the board changes, then auditors haven't been able to look at their figures properly. Well, what's that got to do with it? I mean, unless the CFO's gone, but that's dropped like 40% there.
Not a surprise. No one likes to see a statement like that.
Another one is quite a bigger one. Advanced Medical Solutions. They got a couple of delays happening, and a delay on one side, and this company's reduced one of the companies they work with, royalty income from this company. They haven't put figures in the market or pulled them. So you have 2 parts of business. So they're going to say approximately 127 million adjusted pre-tax profit of 25 for the year. So if you're 25, you're PE pretty much. Oh yeah, okay. What's that? 4 fours, 16 PE 16 is it? So I think,
one second. Forecast PE on this is lost it. It was 20. It was 23. Yeah. At a pre-tax forecast of 21.
So that's probably right because that's
31.
Look at the drop on that today. So that's it gaps down like that from 250 to £2. Oh my word! But there we are.
Still quite. It's actually a very decent company, very good technology. Big turnover, 130 million turnover. Making money. When you see a drop like that. Which is takes it down into sort of very cheap territory from what wasn't particularly cheap before. Then you wonder when the predators will start circling.
So this is the thing. This is Amal says this podcast is really interesting. Thank you very much. It's a video and podcast, by the way. I didn't post the podcast, but I've been following since the last 2 weeks, and I've recently made a punt on a small cap copper plays as the outlook is strong. What's your view? Yeah, I mean, fundamentally there is, going to be a copper demand and deficit for supply. Trouble is, a lot of it's relying on China. Sentiment-wise, a lot of it is relying on China because China, sucks up pretty much 50% of the world's commodities. So when China isn't playing game, the entire commodity sector gets weak. Now, you could say it's only a matter of time now, because where it gets to a stage where you can see already China is trying to stimulate the market a bit. So, it's just how long you're going to wait there for. But if you look at copper plays that are pre-revenue, always make sure there's plenty of cash there, for the next 12 months. I've done previously well on small copper plays. Let's know
the copper market is going to be in deficit. Have you got the copper price chart?
Yes,
up,
I have.
that would be quite useful.
Let me just go commodities. Commodities. Was it HG? There we are. That's copper futures. So, it's come off the lows from back here, but like I said, if you're on a weekly chart, you can go back a bit more.
But when it is an uptrend. Really.
That's from 1989, but you can see here it's fallen off. 2020 really dipped, of course, because the COVID dashed the crash. It's rallied since, but coming down. But it is a play on that, I suppose. And but let us know, what copper plays you are. Don't forget, don't be shy to share your ideas. That's what this is about. Share your ideas there. The one thing
I would say about all sort of mining, oil and gas, is ultimately, that you can pick the better play, the better quality play, the ones that are producing, the ones that are further down the road to getting a mine or a mine built or a drilling campaign underway into production. But at the end of the day, they are all still beholden to the price of the underlying commodities.
Yeah.
So there is always a factor in investing in those sectors that is outside of anyone's control, including the companies that are actually running those operations.
And you should always, say, keep an eye on copper, because they do call it Dr. Copper for its, predictability as to where the global economy is going. So they call it a barometer, because, the more that's being built, like I said, if you go back to when China was doing, really steaming ahead, copper started rallying, because copper goes into pretty much everything, doesn't it? And EV cars take more copper now than ever. So, So
the EV rollout it's going to be huge. There is no doubt about it. I mean, I know people get the hump about things like ULEZ, and nobody wants to give up their petrol cars, really, including me, because I like my petrol car. But ultimately, I think one day we'll all be driving some form of electric vehicle, and I think that over the long term bodes well for the commodities that support that transition.
Yeah, well, let's just finish on one positive here. In fact, where is it? I can't even find it. Oh, yeah. Did you see those figures about the UK economy? That's this trouble with forecasting, you see. Macro forecasting is always very hard, because things happen. You can't predict human behavior, what happens. But the UK economy made a stronger recovery, this is last week, during COVID at the end of 2021 than previously estimated. And they said the data has now revealed the economy is 0.6% bigger in the final 3 months of 2021 compared to pre-pandemic levels. And the previous figure said the UK economy was 1.2% smaller. That's a big miss.
It is a big miss.
Going from 1.2% smaller, they predicted, to 0.6% bigger. And so now we are, I think it was a third in the G7 companies, the fastest recovering companies, whereas before we were talking about being the slowest and at the bottom. So you can never predict things. When we talk about the economies, everyone's in humdrum a little bit down. You can always turn, very quickly.
It's the trouble with these figures anyway. I mean, GDP, what does it really mean? And why are we basing our economic health off of this figure of GDP? They're going to have to spend an absolute shed load, rebuilding or repairing all of these schools and hospitals that have been using this aerated concrete that's now crumbling. That means money is going to be spent, and guess what? That shows up in GDP. But
hang on. So who would you say then, right? I mean,
people going to the doctors shows up in GDP.
Yeah. Well, who would you say then that would benefit? Some of the builders. So is there any listed big companies that would benefit from producing, refurbishing schools? Because that, as an investor head on, first and foremost, a government, health and education is essential. If you educate people in the right places, I'm not talking about just getting O levels or what are they called, GCSEs, A levels, all that stuff. It doesn't matter that. Are we putting people in the right spaces? Are we giving people the best opportunities in life to start businesses or be a valid person in the workplace? That's where education is. And if you take care of education, the economy sort of should look after itself. If you start skimping on education, it won't. We're not going to produce a generation of people who are well balanced in business. And in fact, that's one thing. Investing is not even taught in schools. It's like talk about some things like Pythagoras' theorem and all that stuff, which you'll never ever use. But you never taught about brilliant basics when I was there. You know, maybe even mortgages, but a stock market. In fact, my economics A-level teacher got me into investing in stocks and shares because he did a lot of sort of sort of fantasy league stocks and shares thing. I really got into it, and from then I loved it. You know, so that kind of thing. I think education should be really it's supporting people, but also helping them find their passions. And if you want to get a generation of pioneers or business people, or just people who have the education to drive the economy forward, then you've got to spend money on it. You've got to invest in it. You've got to invest in the people. You can't just say let's try and skimp on schools, save us a bit of money in the budget. How short term is that thinking?
I think it's very short term. I couldn't agree more, Justin. I think that I mean, as you say, personal finance, investing gets scant mention in the curriculum, if at all. It's usually reserved for the sort of, I can't remember what they call them now. I used to call it general studies when I was at school, but the sort of citizenship, I think they call it these days. If you're interested in business, I think that's generally an after school activity. My mum used to run, when she worked for a bank, a young enterprise scheme. So but it's voluntary. And kids are, as you say, coming out of school unequipped with life skills, and this creates problems to the extent where I sometimes think, is this on purpose? The curriculum is it based around the kind of things that will deliver the kids that adults need to, as you say, to create businesses, to be creative, are the right things put together? Do we make it clear that if you do X, Y, Z, then that can be used for a career in all of these wonderful directions you may want to go off in? But actually being able to actually be taught in the right space as well, it would be nice, without the risk of a roof crumbling over your head. Who's going to benefit? I'm sure there'll be lots of people who benefit, and let's see who the Conservative government dishes out those contracts to in a fast way.
Exactly. Marvelous stuff. Don't forget, if you enjoyed this, hit that subscribe button if you aren't. In fact, Amal says Breeden Group could benefit with supplying new concrete. I think it's worth having a look around, see who might actually, because it's going to be a big program. There's a lot of money that's going to need to be spent. That'll help the economy. Maybe that's needed. Cool. Speak tomorrow. Cheers, John.
Cheers.